Japan's SoftBank said it will pay $20.1 billion to buy a 70% stake in Sprint Nextel. In China, inflation slowed to 2% in September, a signal that there is more room for the government to stimulate the economy. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the Morning Call Express. Last week, markets put in their worst week since June, but this morning, futures have a positive tone because we got some good data out of China over the weekend. How are you setting up trades this week?
Whenever you see the headline saying the worst week in 4 months, it's always a good time to cover some shorts. That typically means we're a bit oversold. I think last week the indices were down 4 to 5 sessions. So we saw technical damage adding up, but if you sell into the end of the week, you're never in a good position. So right now the markets are bouncing, and it makes sense. The question is, what type of bounce do we get, and can it be sustained? Or do we see some lower prices before we get a new rally underway, so to speak?
Let's take a look at the chart and look at which levels you're actually keeping your eye on.
So if you go to the chart of the S&P, you will see right there that ever since the October lows, we've had a nice methodical move to the upside. A lot of people getting all concerned with this mini break right here, but look where we came from. So you need to put it in perspective. As far as short term, which is what I like to trade, or the intermediate trend, if you look right here, this accelerated uptrend got broke. It broke once we went below the 8 and 21 days. So if you sold right here, it made a little sense. If you want to look at the overall trend, the trend that's been in place since the June 4th lows, we basically just tagged it coming into Friday. So that's why I covered my spider short, and I think a few people might have went long. I'm flat coming in, so I'm going to see what type of bounce we have. We could see a retest of this 1440 area, but if the bears, or just say the bulls, can't reclaim this zone very quick, we could see some lower prices. So I see another level coming in here, right around that 1407. And then you even have the moving average, which is more of a macro support, but I'm not sure if we could even get there.
On Friday, we saw some weakness in the financials after JP Morgan and Wells Fargo reported earnings. They both had good reports, but they weren't good enough. Those stocks really ran going into those reports. So what do you see in the financial sector now?
Well, that's why you have to be very careful of what you own. Did it run into report? Was the report all priced in? We talked about JP Morgan, Wells Fargo, the expectations being so high. So having both those stocks trade off just a bit after the numbers, it wasn't something that we weren't ready for. If you look at the chart of the XLF real quick, you will see we've had a really nice move from the June 4th lows. I would say, for a little while it might be out of play. I think you could be a buyer of the XLF as this 50-day moves up anywhere above 1550. I even think that JP Morgan, not so bad, didn't act so poorly after the numbers. I think if it could hold above 40 going sideways and just blows off Friday's earnings, I think it's buyable. I think you could buy it a little bit closer to 40. And obviously this morning we're going to see what type of results we get from Citigroup and Goldman Sachs tomorrow. So if you own both those positions, make sure your time frame so you know whether you want to hold them going into the number.
Yeah, that's a good point. We also have other earnings coming out this week. IBM, for one, it's been a good stock this year. What are you seeing there? What are you watching going into the report tomorrow?
Well, I think this one's it's one of the chosen ones. It's been performing very well. Institutions are behind it. A few quarters ago they missed. Last quarter they came in okay. I think they're going to need a good earnings. You look at the stock price right here, and it's had a really nice move. It broke above this 200 previously, had a move to the highs, and not really discounted off. It's technically acting well. So I do think that there is a lot priced in here. So they better come out and meet, and maybe even just meet the guidance moving forward. But if they lower guidance, I do think this is going to be a bit of a problem. So if you're a macro investor, make sure to be in tier 1. I'm sure if you're a trader, you'll wait till after the report.
Google is another stock that's ran significantly going into the earnings report on Thursday. What level do you watch there?
This one, if you're not going to hold Google going into the earnings, that means, which is fine, because that means you're a macro investor if you've been sitting in this thing for years. If you have been riding this trend and this trend has been strong and you're ready to sell it before earnings, I think this gap opened today. Maybe you take a little bit off. You look at the chart of Google, it's been an unbelievable move. This was last quarter's earnings right here. This is when it broke above. So you've had a move from about, 625 to almost 770 or so, and now it's getting a little faulty. So if you're not going to hold it in earnings, I would say on this $3-4 gap up, sell some. It was upgraded, I think, 3 times in the last 2 days, and it closed lower than those upgrades, so it's a little faulty. And this number is going to have to be very good for it to be sustained. So know if you're going to be in there, for the long term, you're sitting tight. If you're a trader, I would just take some off the table.
Well, we're going to get into all this and a lot more in the long form version, so be sure to tune in for that.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.